See, the crazy COVID stock that recently has been in a lot of trouble, and people have, is it a buy, what should I do, etc. And I'm going to be telling you exactly what I think you should do, and what I'd be looking at the moment. So look, this peaked at around 390 back in June 2021 before falling to our current $12. It's been a rough journey for our holders, and I honestly feel sorry for anyone that's been bag holding, because you're more than likely down over 80%, and you're forced really just to dollar cost average or lose a whole lot of money if things don't reverse. But look, I've bought in at 12, and I'm going to be telling you the risks, and then as well why I think it's actually not a terrible idea. Now look, AMC is facing a problem here, and this is what has caused its downfall. They're $5 billion in debt, and they've only really had one profitable quarter at the moment, and they've got 500 million shares, and they need to sell 2.5 billion at its current price point to service its debt. Now, at the moment, if they continue to sell shares, they're gonna dilute the company. Well, actually, they're currently diluting the company anyway. I don't think that's actually the problem, but I think they're gonna send the stock price so low that they'll actually get delisted off the New York Stock Exchange, and that would honestly be the worst thing possible for them at the moment, on top of the problems they're currently facing. So they don't want that to happen at all. That would be a disaster. But look, what they decided to do is go for a reverse stock split, but that absolutely screws over everyone who's a bag holder at the moment, because essentially, if you've got 5 million shares, now you've only got 500,000. But the problem is they're now this allows them now to issue more shares. Honestly, reverse stock splits in general aren't bad, like in theory, because hey, all you're doing is you give me 10 shares, I'll give you one share that's worth those 10. But the reason why it's bad is because why the company is doing this. It's because they need to increase the value of their stock to allow them to issue more shares, to allow them to cover debt. And if they issue more shares, they're going to continue to tank the price of your shares. And if they're selling more shares and adding more shares, they're diluting the value of your shares that you're currently holding, right? So, for instance, you had 5 million shares worth 1%. You've now got 500k, and now your 1% ownership is now about 0.16%. And you're basically just screwing over holders here to allow them to cover it. And the worst thing is, if this falls below $10, doesn't matter, they won't have enough money. They won't be able to service their debt. So you are buying a very in trouble company at the moment. And I wouldn't be surprised if some of the larger players in the game at the moment are going to try push this below $10 to prevent them from a comeback, right? So now that we've got the risks out of the way, what are the upsides? Well, look, we're approaching this very key level at around 11 that we bounced from, fortunately, and we've seen this nice reaction. I was a bit late. I bought in at 12. I wanted to buy in way earlier, but I was having some technical issues on my end, and so I'm a bit late, but I'm still up exactly 8.5% in a matter of a few days. Now I understand this could evaporate overnight or like tomorrow. You know how AMC is, but look, it is what it is. I'm up at the moment and I'm happy. So what would my targets for this stock be? Well, I'm looking at the moment. First target would be $20. Next target would be at 38. Now, honestly, if you believe in the company, you are more than happy to hold to 140, 150. But to be honest with you, unless they're able to get their shares sold, then I can't see them going that high. Although honestly, if the shares did manage to stay at that high for this long, and that may allow them to exit their debt safely, and then we could pump higher. But look, I'm just getting in this for a short scalp play. I'm not really interested in a whole lot in the future of AMC, in all honesty. So, right. So that's my targets. Those are the risks. And the upside then is if they can get this debt cleared, and because of the amount of puts at the moment and shorters, we may see a short squeeze. But the only thing is, if the new shares are being sold directly to hedge funds and market makers, so the thing is, like with dilution of this magnitude, and the whole point is because they're being sold to hedge fund apes, like speculators, Wall Street bets guys are wanting a short squeeze, but this won't happen if we just keep diluting. So you're not going to see that squeeze to $30 that you're looking for, or that I'm looking for. Here, look, I reckon it's worth a punt. Set a stop loss like at about 10 or 9. You lose 10-15%, but I've only got 100 shares. It's about a little over $1,000, I think, almost 1.3 or something. It is what it is. I think it's a good price now. I think it's worth a shot, and we'll see what happens in the future. Thanks for listening.